Welcome to the Fast Five by Fear and Greed. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, today in just 5 minutes, we are talking all about investing in international markets, not just Wall Street though, elsewhere as well.
That's right. The number of Australians investing overseas has grown significantly in the last year or two. In fact, over the last 5 or 10 years, it's become just a lot easier to do. Remember, this is general information only, and you should seek professional advice before making investment decisions. Catriona Burns is the lead portfolio manager at WAM Global, based in New York. Catriona, you're almost a regular now. Welcome back.
Thanks for having me.
Let's start with Wall Street. What's the outlook for Wall Street over the next 12 months or so?
What you're seeing at the moment is, you've had a decent valuation reset across the market as interest rates have gone up. The next leg to happen now is that earnings are coming under pressure. So it does differ depending on, the sector that you're referring to. But there are, when you look at analyst forecasts across the market, they do generally look very high. And so what you're seeing is that as companies report each quarterly set of earnings, those expectations are coming down. So it's really a matter of trying to find opportunities within that, identify companies that, don't have a decent amount of earnings risk and that can weather the deteriorating macro environment that is surrounding them. So I'd say, look, it's a very much a opportunistic environment where, you have to pick out the individual stocks rather than saying that the market itself looks cheap or expensive.
What about Europe?
Yeah, Europe's been very interesting because they've had as well as having rising interest rates, they've had significant amount of food inflation and energy price inflation. So it is a matter of, again, going sort of through each of the countries because some are under much more pressure than others. So say in Germany and the UK, those energy prices really have hurt the consumer, whereas in France, they've capped the energy prices. So the companies there are kind of handling it better. It is, areas such as housing, anything consumer goods related really has come under pressure, whereas anything travel related, the falling euro and pound are certainly helping travel rebound. So companies exposed to that have actually done pretty well. But yes, they have had the additional compounding pressure of those energy prices when you compare Europe to the US.
I suppose the one thing about Europe, some of the valuations have come off quite a bit, though. That's to its advantage.
Absolutely. And that's a really good point. You have seen lots of companies just blanketly thrown out because they were in Europe. So look, we are seeing actually quite a few opportunities. But again, for us, it's finding those companies that do have sustainable earnings and that aren't, hugely come downgrade. But we certainly do see opportunities because you're right, the valuation, some of those share prices really have been aggressively hit across Europe.
Closer to home, Asia and the big markets in Asia, Japan, Korea, China. So I'm not really thinking emerging markets. I'm thinking about more the developed markets. What's the outlook for them?
Look, Japan's been a tough market to even go visit because because of the lockdowns there have lasted a lot longer, and I guess the willingness, given the history and so forth, it has been a market that's been tough to get on the ground. But there are some fantastic businesses in Japan, and we do actually see opportunities there. There are a lot of exporters that are dependent on what the yen does. So it is nuanced and you've got to sort of pick within the market. There's companies like, we own a discount supermarket player there that's kind of the Aldi equivalent. We think is doing really well and will continue to, given the trading down that you're seeing as the economy, growth more generally comes under pressure. They're lucky in that the inflation, they haven't had inflation for decades. And so, they don't have the same inflationary pressure that you see across the US and Europe. So we do think Japan is interesting. And the same for Korea. You just got to pick within the market and the companies that you want to play and that you think have that longevity of earnings growth.
We're almost out of time, so very quickly, emerging markets. Everyone's still in love with Mexico. It seemed to be the theme of 2022, Mexico.
Yes. Well, I think it's been Mexico is interesting because it's been a massive beneficiary of China lockdowns and US and that reshoring thematic. And It is a thematic you're seeing, across the world as companies try to diversify their supply chains, given everyone realized they were just a little too reliant on China through COVID and then the subsequent lockdowns. So I think, I think Mexico will continue to benefit from that reshoring. And there's a lot of US companies that are using it as a option for where to set up, manufacturing or assembly, etc. So I think, it should continue to benefit from that. China will be interesting. I mean, at the moment, as the lockdowns lift, there's the rising cases. But as we look further through 2023, that should, settle down. And they are, they're not on the same path of rising monetary, rising rates, etc. So it will be interesting later, through 2023.
Thanks for talking to Fear and Greed, Catriona.
Thanks so much for your time.
That was Catriona Burns, Lead Portfolio Manager at WAM Global. Michael, do you know where to invest now?
No, I do know we managed to cover about 2/3 of the world in just under 5 minutes. I suspect that is something near a record.
I think so.
As always, you should get professional advice before making any investment decisions. Thank you very much, Sean.
Thanks, Michael.
That's it for today. Make sure you hit follow on the podcast. A new episode every day, regular business news back from January 16. I'm Michael Thompson, and that was The Fast Five by Fear and Greed.